Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll give you my view on the coming week in the macro area. Well, the past week has led to a significant spike in Russia-related geopolitical risk. There were two events that led to that. One was continuing instability in the neighboring Belarus, which has quite significant impact for Russia-West relations, given the high level and close level of relationship between Russia and Belarus in the military and strategic area. So there is potential risk that Russia can be involved in this domestic conflict. If so, then there is, there is a significant possibility that the West could increase its pressure and sanctions against Russia as a result. There is quite clear parallel to the events that happened more than 6 years ago in Ukraine, and this is something that is on the mind of many investors and is provoking a more cautious position versus the Russian assets, particularly from the side of foreign investors. And another event was alleged poisoning of Russian opposition leader Navalny. The news broke out on 20th of August. Last week, at the end of last week, Navalny was transported to Germany for rehabilitation, and we're now waiting for formal reports considering his state and perhaps possible reasons for deterioration in his health from German authorities. So looking into the coming week, these geopolitical factors would remain to be very significant for outlining the dynamic of the Russian market and the ruble. Last week, ruble has reacted quite significantly to the spike in domestic risk, with foreigners selling Russian assets, particularly Russian state bonds, ruble bonds, and buying FX. So the pressure on the ruble has increased, leading to about 2 ruble per dollar devaluation of the Russian currency. In this week, depending where the geopolitical situation is, if we see more stability in Belarus and less risk of Russia being involved, then that could be treated as a good sign. And with Navalny, if his diagnosis does not show any trace of poisoning, that could be also seen as a very good news. In this situation, if both factors prove to be more positive, we could see a ruble rebounding to the levels of around 73-74 rubles to the dollar, where the currency traded before the news broke out, geopolitical news broke out. If the situation in Belarus continues to deteriorate and Navalny diagnosis shows traces of some poison, then we could see continued sell-off on the Russian market and perhaps even more pressure on the ruble, with ruble going down to the levels of around 76-77 rubles to the dollar. So the geopolitics is the one big factor to watch in the coming week. Also of importance was last week's report from Rosstat on the state of Russian economy in July. That's a monthly report, which has shown basically more or less the same picture as we saw in June. A two-speed economy, with real economy posting fairly moderate decline of around 2 to 3% year on year, if one excludes oil and gas sector. In oil gas sector, the fall in July was much more significant, around 15%, but that was largely driven by the OPEC Plus deal, on production cuts, and the effect of warm winter in Europe, which led to a significant decline in demand for natural gas. So if we exclude oil and gas, so the real economy of Russia is hovering at -2, -3% year on year, which is quite good given the situation, and particularly compared to many other countries where we see much more significant declines in economic output. And on the other hand, the consumer part of the economy is showing much more significant weakness. Although there was some improvement in the dynamics of retail sales and services to the population in July, that was, in our view, more of a temporary phenomenon. We actually see signs that the consumer demand is reversing and becoming weaker in August as people tend to save more. The risk of another wave of coronavirus plays out here, as well as the general weakness in the economy and still rising unemployment. So this is something that we expect to continue. Basically, the situation in the economy with the real economy perhaps showing a bit more stabilization and perhaps a slight improvement, but the consumer part remaining in the weak state in the months to come. Another event apart from geopolitics to watch in the coming week would be the inflation data, the weekly inflation data published by Eurostat on Wednesday. Last week, Eurostat reported that the deflation we saw, seasonal food deflation that we saw in the week before, has ended, and if this weekly inflation data shows that there is no deflation again, that significantly increases the risk that annualized inflation is going to grow quite significantly in August and in September, and that of course lowers chances for any central bank rate cuts. We still continue to believe that the central bank would remain on hold in terms of rate cuts in September and also throughout the remaining period of this year. That's all on my side. Thank you.